Just getting a quick glimpse, the delivery number is 806, going up to 905. That's double-digit growth.
That's unbelievable.
That's pretty strong. And the margins, the profitability across the segments, about 100 basis points of improvement across each segment. And these are big divisions, so tons of productivity going through.
So in terms of worrying about trade, what in here do you see that either did happen with trade in China or didn't happen with? What was all the hand-wringing and consternation? Why aren't we seeing it?
So I think we talked about this a moment ago. This is a long cycle stock. The multiple's been capped because of trade negotiations, although it won't really move the needle on a 7-year backlog. That's really what's impeded the momentum in the stock.
So you can't say that Caterpillar was wrong or not executing. It's just that it's a different cycle of business for Boeing. They're not managing it better. They're still being affected or not by China.
It's the length of the backlog, 2 to 7 years, depending on the type of plane. Defense, as we know, has a 5-year backlog. So just the momentum in that business makes it a lot less volatile.
The day the Caterpillar reported, and we had, the Dow was down, but the other stocks we were showing were Deere and Boeing. We threw Boeing right in with Caterpillar. It's not even, one makes excavators, the other make these big flying behemoths, and we still threw them together because of China, and we shouldn't have?
I think they both move on the China trade, but just the cycle of the Boeing aircraft is much different than an excavator, as you say. And I think, you look at what CAT did. I don't cover CAT, but you look at the momentum it had to start the year. That's what drove the pullback, I think.
Okay, so Santoli, can we cut out the middlemen here in terms of, you got the market's up 265 now. You got Apple and Boeing. I know you're going to be sitting here tomorrow, and you're going to have talked to the assignment desk, and you're going to have pitched some story about the S&P or in the tone. Can you do it now instead of what are you thinking?
No,
what does this mean for the tone of the S&P?
What I would say about Boeing is
chase this rally, don't chase
this. In the best group in industrials.
Okay.
It is not necessarily a reflection of everything else. The S&P is still up 0.5% right now. It's great for Boeing, but Boeing has been such a huge outperformer. And Apple, I've said this for 6 or 7 years, it's not really a broad market bellwether.
Okay.
It's a very important stock. It's a risk sentiment indicator because Apple kind of goes on its own streaks. It's based on its own business dynamics. It's not really reflective of macro stuff, except for China recently. So it's all good, but I think for Apple, it's a different situation. I mean, I think that's a reflection of just how bad expectations got. The bounce off the lows in Apple was much weaker than the broad market, and now it's catching up a little bit. So I look at AMD, which was a really nasty revenue guide down. That stock's going to be up, right? So I think we're still working off a lot of the built-up negativity going into the earnings season. Beyond that, I don't know whether the energy is being built up to carry the broad market higher in the very short term.
We just had a guest here, and I asked him. He's thinking that we get back to new highs, but it's not going to happen, he thinks, until the third quarter.
Yeah.
So is that whole mentality we had for a long period of last year that, oh, my gosh, if I don't buy on a 3 to 5% dip, I'm going to miss my opportunity? Is that just out the door?
I don't know if it's out the door. I do think that after you had such a very sharp kind of waterfall decline, down 20% in 60-something days, which is what we had at the end of last year, the textbook says you don't turn around in a V and go right back off to highs. You just kind of chop around a little bit. I don't necessarily think, I'm very agnostic as to whether for some reason you have to roll over and go back near the lows. I have no idea. But I do think that it's not usually straight up, and earnings season is a lot of offsetting currents that shake themselves out over the course of 3 weeks.
So you aren't even willing to say we've seen the lows?
I think it's very likely we've seen the lows.
Okay, very likely.
But I don't think
no one can ever say more than very likely. But
I think we've seen very likely we've seen the lows for now. But
for now, well, there you go again. What do you mean
for a couple months?
For a couple months.
Yeah.
We may never see those lows again ever.
Here's the problem. Nothing that's happened, nothing since December refutes the idea that September. Yeah, that's right. Repudiates the idea that September was a bull market high, and you're in a downtrending market, and this is just a kind of a counter trend bounce, and earnings are going to be kind of noodling around less than 5%. And last year we had 24% earnings growth and the market was down.
So Sheila, why do I ever have to make any type of investment decision about Boeing again after you just told me that it's all in place for 7 years?
I mean, the free cash flow, we didn't talk about that, but their guidance is about $1 billion higher than the street. They're coming in at $17 to $17.5 billion. So that how they'll deploy that back to shareholders with the dividend and share repurchases is very important. So the story is in place, and they have the cash to deploy as well.
If I
and
read
Joe,
that, yeah, go ahead, Phil.
I was going to say, to echo what she's talking about there, this is all about execution. One of the challenges for Boeing when they started increasing the delivery rate, especially for the 737, which is really the cash cow for that company on the commercial side, was the concern of, will you be able to not only increase the delivery cadence, going from 42 to 47 to currently at 52 and then going up to 57 this year, but would you be able to do it and efficiently do it and bring that money, that free cash flow? They clearly are doing that. And now you've got not only the 737 increase in deliveries coming up this year, another one, but then you have the 787 going from 12 a month up to 14 a month. So it's very much an execution story for Boeing. And when you've got a backlog of nearly 7 years of commercial airplane deliveries, that's the key. That's what you want to show, that you can execute efficiently.
Well, Phil, my point is, next time Wilbur Ross says we're miles and miles from a trade deal with China, and Boeing goes down $4. Do I need to take that seriously?
Joe,
I don't understand.
Yeah, Joe, and we'll talk. Joe, we'll talk with Dennis Muhlenberg about this when we talk with him today, shortly after 1 o'clock on the exchange. The thing to keep in mind, though, the reason this stock is going to move down is because I think they get 23% of their revenue from China. It's tied into China. Now, that doesn't mean that those airlines are going to immediately cancel their orders, but there is a huge component of their business that is tied to China. So it's natural that the stock is going to be moving down whenever some of these trade headlines come out. But it has been documented and said time and again, not only by the analysts who have been on our air, but others, that in terms of Boeing's outlook in China and deliveries and orders, they have not taken a hit despite the trade tensions. They continue to rack up the orders and they continue to do the deliveries. The concern is, what happens if this goes on and on and on?